Everyone, Wednesday, November 2nd, where we're going to do the Mortgage Minute covering interest rates in about a minute. Yep, we usually do this on Tuesday. We didn't do it yesterday. Why? Well, today is the big and the last of the year. The Fed meeting where they're expected to hike rates yet again by about 75 BPS. Everything's been baked in the past couple of weeks for that. We're hovering right around 70% on the 30-year mortgage rate, as we know, and we can kind of expect what to look for after they raise this and what the rest of the year is going to be. Still expected to keep going up and up for these next 2 months, unfortunately, on an interest rate after they raise this one more time. And we'll see where the economy is heading. But a little bit different chart in front of you today. Something more to think about. Hey, what does this really mean when they hike rates like this? What effect is it having out there besides just showing you this is what the 30-year looks like or whatever? Here's a really good example of, our old friend, the millennials, right? Where we've been focused on them for close to a decade and the decisions they make. But this shows you how they felt about the marketplace, in 2018, 2019, and specifically in 20 and 21. Well, those were interesting years, really the height of the pandemic, obviously, equity screaming upward by the month. But now we're in 2022, where what everyone's calling a buyer's market now in most places, and you're still seeing a jump in the millennials who expect not to own a home. Why? Well, the interest rate, which was once 2.5%, 3%, is now all the way up to 7%. Again, expected to go even higher than that, and that's having a really big effect on a young part of the marketplace. A quarter of people, and unfortunately, I think you're going to see this go higher, are expected never to own a home. They're expecting themselves never to purchase a home. That's big, and we should all take moment to think about that, because they're not looking at 2, 3, 4 years down the line as to when the rate was going to go down. They're looking at the mix of both of those. Hey, these rates might stay elevated for a long time. They're getting more realistic about that, and certainly the prices, even if they do come down, are they going to come down enough? We'll see if this chart ever changes, but it does tell an interesting tale. Thank you for joining me.